Who wants to tell us, just for anybody who didn't do their homework in the audience, what's tokenization, and is it a buzzword or the right word to use?
Well, tokenization is an amazing feat, right? So we all believe here that a blockchain is the most efficient way to transfer economic value. And this can be, for anything that is represented or is truly a digital native asset. So that's what I would consider is the exciting aspect of tokenization. So in finance, for a few hundred years, at least 50 of the last few hundred years, it's clear what lives on balance sheets, right? We have financial assets, tangible assets, and intangible assets that live on our balance sheets. Anything in the world, anything in a firm, anything in a non-financial firm, in a financial firm, on an individual's balance sheet can be categorized and is well defined by finance professionals and other people, even accountants, in these three categories. And it really helps to think about tokenization along those three categories because of the underlying assets that are so different. The real prize, while, tokenization of cash and cash equivalents has taken off, and I guess fund share, the market kind of decided that fund shares will live on distributed ledgers. I think it's important that cash flow-based instruments, need to contain the logic. So this new infrastructure that we're building needs to contain the logic of the underlying financial instrument, both in a machine-readable and machine-executable format. Otherwise, we will not be able to benefit from the efficiency, that the technology itself is offering, which, also means that, in a back office setting or in a front office setting, more efficient price discovery will be possible. And in a back office setting, really a post-trade automation can occur. But you need to have machines be able to understand more about these assets, the state of the financial contract, and the future cash flows that are contained by these assets or defined by these assets. I think also, the exciting aspect of this technology really is when you think back what is a blockchain and what are these immutable ledgers, they are assurance layers, right? And on an assurance layer, you can build a variety of business models. But in finance, the great promise here is that we can collateralize more consistently with higher fidelity. So in capital markets, this will mean that, any asset-backed instrument will become more efficient, if they exist today already, because all this collateralization will be done much more efficiently, easier to discover, help with price discovery, liquidity, etc. So that's one. But the beautiful thing and the most exciting aspect is that you can expand the universe of collateralizable assets, right? So now here we have a market that is synthetic, and and you have basically underlying assets unrelated, but they still exist. But of course, when you think about the balance sheet of the world, which today is represented in financial instruments and capital markets, that balance sheet of the world will become infinitely larger because of this assurance layer and this idea that you can collateralize many more items, be digital or non-digital, in financial transactions. A extremely granular portfolio construction from a risk-return basis. So it will really deliver the promise of a portfolio of one for your clients, because you will be able to pick and choose assets that live, on balance sheets, and they're well understood, and they can be transferred easily, and you can compose these portfolios, and with a very high degree of assurance, because again, they live in a truly digital environment, and hopefully they are truly digitally native and not just point to a term sheet that lives in a PDF somewhere on a centralized environment. So that's what I'm very passionate about. So I think the financial logic also needs to be machine readable and machine executable. But this is the promise of this technology. And in case you think that it's just some degen crypto guys here, I always say to a more financial based community based audience, you should really watch the 7 minutes of Larry Fink's interview that he gave to Bloomberg in January when he launched the Bitcoin ETF. He only talked about Bitcoin for about 2 minutes. The rest of these 7 minutes was purely on what this technology will mean for the infrastructure of financial services firms, and of capital markets.
Ralph, you're a degen, and you know it. Stop pretending you're not. You look like a degen.
The fundamental risk is that we're just copying the existing system onto new rails, and we forget the most fundamental aspect. And one of the reasons why finance is in such a mess, what Stacy just described, is that we've learned in the financial crisis the essence of cash flows and the understanding of what cash flows are. Everything in finance is derived from everything of interest in finance is derived from cash flows. So if we rebuild this system for cash flow-based instruments, it's important that the cash flows are there in a machine-readable and machine-executable manner. So we need to achieve asset interoperability. We need to achieve asset interoperability on the level of the asset, not on the level of the infrastructure. Okay, so that's number one.
Yeah.
The good news, however, is that, and I'd like to remind people, there are certain jurisdictions that solve, some of these clarity questions, and they're moving quite fast. And these are not just, offshore jurisdictions which have questionable reputation. When you think about Germany, where it's now clear that you can tokenize debt in a clear environment, there are large banks moving to create securitization platforms and infrastructure which will be operational, in the next 12 to 15 months based on this technology. So once, we see this happening, this is really, this is going to be really exciting, and people will understand what can be done with this technology. So there's hope. There's another risk, and I think it's worthwhile we say this here in New York City, is that, whoever gets this right fundamentally, for the first time in 220 years, someone can build a capital market that competes with Anglo-Saxon capital markets.
No.
Just on the basis of this technology. That's my hypothesis.
Yeah. 100%.
So we should be careful. We have to move, here in I would say, expeditiously but not hastily, on the regulatory side, to enable what I've just described, what will be, operating and productive in Germany, which is still a meaningful, economy, and we should not fall behind. I also think that it may be surprising to some people, but I do believe that large non-financial firms will drive tokenization. Why? Because if I'm a CFO of a large non-financial firm and I understand how a deposit token can really efficiently help me manage my cross-border payment infrastructure, etc., how I can collateralize certain holdings I have in various jurisdictions with the help of a large bank or of a universal settlement layer like Finality, for example, which is trying to build that. Then the CFO will sit there and say, okay, so now, I'm at the very top of my balance sheet. It's a tiny portion of my balance sheet. But, I have like 55 billion more assets on my balance sheet. So what can I do with that now? And they will, these CFOs will come to people like us, hopefully first, because they don't get the help from the corporate bankers because they don't understand what tokenization is. But that's the opportunity, right? And then we move down the balance sheet, in terms of complexity. And in some areas, it's going to be very easy to tokenize some of these items. In other areas, it will not be possible or difficult to ascertain the existence of an asset or collateralize it. But the exciting thing about public and private is that, in a public environment, I can get exposure to a granular piece of a real estate in a synthetic way as a small investor, and I can really diversify my portfolio if I wish to, to put in the effort and energy to understand where I can get exposure. I can buy, futures, I can buy commodities in the future, hopefully, on decentralized exchanges that either represent the real thing or are in synthetic representation. That's quite exciting. I cannot do that, in the traditional market in an efficient way. And at the same time, as we said before, it's all about securitization, which is why, it's natural that people will do this on private environments first, in order to understand how it works and also not to risk any regulatory exposure. So if it's natively digital, already exists on the balance sheet, which, for example, most intangible assets exist in digital form, hopefully, and many of your financial assets and liabilities exist in digital form, that is where you should start, and that's quite exciting. Now, do I want to own a trade secret, by a publicly owned company because I think it has a revenue stream? I don't know, but in the future, that may be decisions that we can take. I can maybe own, I don't know, a 50,000 of Coke's, formula, right? Not just by owning the equity, but by owning actually a piece of that very formula. Without blockchain, you will not have version control, you will not have access control, you will not have regulatory reporting required, which is coming now. It's here in the US with the executive order. It's in Europe. It's a precondition for the safe use and the compliant use of AI.